or sell the energy ETF, the XLE. First off, read this disclaimer carefully. Then do your good deed of the day by liking and subscribing. So energy is here, 73% here from the 52-week low, and we are basically at the highs. We start here with the charts, very much big picture. And what we can see is that going way back here to 2003, energy moves in very big waves. We do have time cycles. They have, however, differed in duration. But definitively, this is very much affected by time cycles. Huge rallies, but then we can enter very protracted downtrends. And these rallies and pullbacks, they are not one-to-one a reflection of the actual use of energy in the world. Obviously, that's not the case. So there's a lot of expectations here, a lot of psychology. And the reason why this one popped up on my radar is that we currently have a situation that's very, very much interesting. We see back here is that we did have a triple top pattern that led to a very substantial downtrend. We now have two tops. It is, of course, fully possible for there to be a breakout. What we are seeing so far is that this is a level of exhaustion. When we go here and look at these other indicators, the weekly RSI is not yet at the levels that have characterized like major failing points here in the past after those huge rallies. But when we do look at the 20-week moving average here in purple, the PPO, the distance between price and that moving average is definitively on the higher end of the spectrum. When we go here to the daily data points, then we do see that recently, ever since mid of this year, the current RSI level is a fail level. Like here, this RSI level was good to short, a nice pullback. Here we tested the same level again, and if you shorted that RSI level, you would have received. Okay, let's get a bit of an accurate measurement. So it would be from here, approaching 18% down. That's significant. And also looking here at the PPOs and also the MACD, we are at a short-term fail level. We usually see that the bulls get into trouble there. So especially looking shorter term, the current RSI level is a point of weakness. So yes, RSI resistance on the daily data points, and I give the bears a 6 here. Let's look at the seasonality. So the seasonality tool here to the right shows us that, going into early November, there usually is a little bit more strength, but that is when the seasonal strength peaks. And we pull back a bit, a final rally into late November, and then very substantial weakness into January. So there is definitively weak seasonality on the horizon. Over the last 5 years to the left, we see that November is decent. December and January are strong over the last 10 years. Then we do see that November and December, they have a tendency to close higher than we opened, but the average performance here for December is 0, which is not exactly appealing to investors. So the bulls who look at seasonality will not be really interested in holding into December based on the 10-year seasonality. Looking at the last 20 years, we do see that November and December are overall strong. And the seasonality data is a bit mixed depending on what kind of perspective you prefer. But I will give this a bit more to the bears than the bulls. So a -2 here. Let's look at the fundamentals. So I am comparing the XLE against the S&P 500. Looking at performance year to date, XLE is monstrously outperforming the S&P 500. 65%, versus 19% loss. However, there's a caveat here. Okay, that also increases the risk that people will rotate out of high performing energy stocks and rotate into underperformers in other sectors. Beta here is much higher for the XLE. Yield is much, much better, 3.75% versus 1.22% for the SPY. Looking here at the holdings, ExxonMobil, Chevron, Schlumberger, a bunch of very known names. We have very big companies in this space. When we look here to the left, on the S&P 500, we do see that ExxonMobil is on the top 10 list. Yeah, so here you can see some further breakdown. I will give this one to the bears with a -3. The yield is really good, so that's bullish in terms of fundamentals. But at this point, we have seen such a substantial rally in these stocks that there is a very high risk of rotations. Like, there are certainly macro factors behind this rally, but then again, we have already seen a very, very substantial move. And the issue that we did see in the charts is that the XLE, after big rallies, there is a bit of a tendency for topping patterns to form. You can see it even back here in 2011. You got a clear double top and then a significant pullback. And also here in 2008. So topping patterns, like resistance levels, pretty strong for the XLE. So yes, we can get a breakout. It's just that the chart history, it talks a bit of a different message. Looking at the relative performance here, we do have 50% positive correlation with the S&P 500 and 99% with the IXC, which is the global energy ETF, 93% positive with crude oil, and then you have 83% positive with natural gas. Looking short term, then we do see a mere 6% correlation with S&P 500. Yeah, almost perfect with the IXC. 43% positive with crude oil, which is, it's positive, but it's not that big. And then 33% positive with natural gas. So what happens with the IXC, which is the global energy ETF, is going to have the biggest effect on XLE. So yeah, here is that chart. We do see, the same big picture pattern, huge rallies, but also very long and protracted pullbacks. You see here during this rally here from 2016 into 2018, that is when you saw a peak, and then we had a downtrend all into the C19 lockdowns. But the pullback happened way before it, so it just energy is just a different animal altogether. Let's look a bit here at the short term. We still aren't at that upper resistance level yet here. Now, if you look at some of the other indicators, if we look long term at these PPOs, the red, blue, and green, we are very elevated, historically speaking. And also the MACD recently reached a very extreme level. Here are the daily data points, and we see something similar that we saw on the XLEs, that RSI on the dailies has reached a level that very recently was very shortable. Here is the XLE ETF against the IXC. Recently, we have seen a very substantial outperformance from the XLE. We are in the upper end of the RSI range, so more often than not, we are below this, meaning the XLE is abnormally outperforming now the global energy ETF. If we look a bit here at the seasonality, in blue here over the last 7 years, green the last 5 years, and red the last 10 years, from around the beginning of November, the XLE starts to underperform global energy. Here I am comparing the XLE against the S&P 500. In this case, we saw that the XLE massively underperformed the S&P 500 into late 2020. And now we have a period of outperformance, and we do have a bit of a breakout in this case. So let's look a bit here, and we are still, at a relatively low level, historically speaking. The seasonality, however, is not bullish. There were numerous, bearish points here. One thing is that the XLE specifically has a tendency to begin to underperform global energy. There's that. Against the S&P 500, there were some signs that it's been undervalued for quite some time. But the seasonality, though, was not bullish for the coming months. So overall, we do end up with a minus 3.8 here for the bears. The key signal is the RSI resistance on the dailies. So this is a relatively shorter term signal, but the signal was pretty clear and there is corroborating data. So we have some time left. Let's look at crude oil, natural gas charts. And so charts now, and then we will look at some of the stocks in the XLE ETF. So let's look at CL, that is crude oil futures. We start here with the weeklies. So crude oil, it has actually been a bit in a downtrend here ever since 6th of June of this year. This purple 20-week moving average seems very, very, very shortable indeed. So yeah, the bears just come back there to short. On the dailies, the blue 100-day moving average is just super easy to short here for crude oil. Then we have natural gas. And natural gas is a bit of a mess. We did see a very strong bounce here from the 100-week moving average here in blue. We are seeing some resistance here from the green 50-week moving average, but that is basically to be expected. Here you can see the daily data points. Yeah, the purple 20-day moving average in this case is definitively a level to watch as resistance. Next, we have ExxonMobil. A very, very strong rally. So this is obviously bullish if you hold a position, but the question is, if should you buy or sell now if you don't have a position? And I don't like buying these kinds of moves. The weekly RSI is rather stretched. Also, the PPOs. Looking at the daily data points, we are literally at the same level that marked the high back here. That's not particularly appealing. MACD also is at a very extreme level. So when you have those, levels that are very extreme, sure, it can go higher. It's just that the odds do not really favor that. CVX is next. Chevron. In this case, we are breaking out a bit above resistance here. Not in any way as mature of a breakout as we saw with ExxonMobil. Let's look a bit here at these other indicators. Yeah, we do have high readings on the dailies. Yeah, you see that recently we have been a bit higher though, but based on the recent rallies, there can be a bit left, but there is the expectation of a bit of a cool down after these types of moves. So we have looked at the energy ETF in detail and really looked at the energy commodities, at least some of them. So overall, I do think that there are some signs of a very mature rally now. very much the expectation of a period of pulling back. It could be due to rotations. It also is from the bigger picture. When we looked at the long-term charts, energy has a big habit of doing this. Major rallies and also very major pullbacks that are not one-to-one at all connected with the actual usage of energy in the global economy. And of course, remember that you can now get a free newsletter on diamondarmy.com.